companies reporting this week, there are some really hot charts. And so I pulled out a cross section of them across the economy so that you can see kind of what's going on out there in the economy and in the stock market. This market rally is not being led by just one group. It's not just the FANG or the big technology companies. It's a bunch of areas. And what are they? Let's dive right in and find out. So the first one out of the gate is a railroad. Yes, the old economy rises again. Look at Union Pacific, ticker UNP. This is a great chart, and they've beat 3 out of the last 4 quarters, so that's pretty solid too. Shares are busting out. They're not super cheap here, but they're trading around the historic average that they've been at for the last couple of years with a forward PE of around 23. So these shares are only up 7% year to date, even with this breakout. But this is the type of stock where you kind of buy and hold, and it just kind of grinds higher. That's what I call it. It will move higher, but it's not like super steady and direct. It's just kind of slowly getting there. But Union Pacific is a big player in the economy, and the rails need to be outperforming over the next couple of quarters if this economy and this recovery is going to be strong. So the rails are key, and this is definitely one to watch. Then we're going to switch it over to the home builders. Yes, they are still hot. D.R. Horton, ticker DHI. The demand for housing is not slowed even as we head into this recovery. There's big millennial generation, and the biggest percentage of them is around the age 28 to 32. And that's right when you want to start buying your first house or place to live. And so everybody is seeing a big demand there, low inventories, because D.R. Horton hasn't been building enough houses over the last decade. So you have the perfect storm for the home builders, and you can see they put together great earnings surprise track record. Their last miss there in 2019, and they put a string of big beats together during this pandemic. 3 big beats here. All the home builders are beating big. The analysts can't keep up with what's happening. And these shares still dirt cheap, even with the 5-year highs and this big breakout. They're up 39% year to date, but the PE is just 10.5 with a PEG of 0.8. That's how strong the earnings growth is, and their margins are still on the rise higher. Can they keep up this level of hotness? That's one thing that's going to be impacting a lot of these home builder stocks. So we will see. Then we're going to switch it over to Snap. Yes, on the social media side, they've got a great earnings surprise track record, just 2 misses since their IPO in 2017. And here in 2020 is when they finally busted out of that narrow range that they had since the IPO, and they raced off to new highs. That's basically on an improving advertising revenue outlook for Snap. Yeah, Snap is back in, and the advertisers are willing to pay to appear on this platform, but they're not cheap after this big run. Shares are still up 22% year to date, even with this little bit of weakness here you're seeing and this pullback, but still expensive at 440 times earnings. So you're paying a lot to get access to those earnings, but it's all about momentum with some of these social media stocks, and Snap has had it. Have they kept it? We will see. Then we're going to switch over to the spirit side, Boston Beer Company. This has been one of the hot pandemic plays as well. Now, it is coming off a miss last quarter, but it looks like no one really cared that much. You had a little bit of a pullback, but shares are still off to the races here, still expecting double-digit revenue growth this year and next year. And that's impressive. So they are keeping the great fundamentals here into 2021. Shares up 30% year to date. This is one of the hotter ones. And 58 times is now the PE, the forward PE. So you're not getting it cheap here. And the question is, how much are you willing to pay for those earnings? So that's also something to watch here. And then we're going to wrap it up with an industrial. These have been among the hotter stocks as well, because this is a big reopening play as manufacturing picks back up and the global economy starts to awaken. And Honeywell, it's been one of my favorites, ticker HON. You can see it's got this great earnings surprise track record. It's met or beat every quarter for 5 years. That's not easy, even during the pandemic. So that's very impressive. And you had to be kind of patient here. You had this nice run here in 2017, so everybody's feeling good. But here you had a 2-year kind of treading water situation. And then you had the breakdown during the pandemic. How many of you were willing to hold on during all that time where the shares weren't really going anywhere? Well, if you did, in late 2020, you were finally rewarded as they busted out. And now busting out here again in 2021, shares are at, as you can see, the 5-year highs, but up just 9.1% year to date here, and not cheap anymore. They used to be kind of fairly attractively priced over that treading water time period, but now trading at 29 times. So this is another question of how much you're willing to pay for these Honeywell earnings, which have been solid and the company has been producing. But as it gets, a little bit more pricey here, some buyers on the street might be asking, how high is too high to pay for this company's earnings? We will see. So as you can see, these are all the hot charts that I pulled out this week, and they're all in different areas of the economy. That is healthy. As I said at the beginning of the video, if this rally is to continue, you want more than just big tech rallying. You want more than just the social media and some of these growth names. Yeah, I want the old economy. I want those railroad stocks busting out, and we are getting it. So the question is, can we maintain it? These are the charts to watch. Tune into their conference calls to see what they're saying. But the earnings, the E side is looking good. And even with the old economy and manufacturing stocks, the E is on the increase up. So that's what makes this earnings season so intriguing, and what the forward guidance might look like also intriguing. So you want to tune into all my earnings videos, because I'm going to be covering all of this stuff all earnings season long. Who are the all-stars? Who has the hottest charts? And which ones should you be watching? Be sure to tune in and subscribe. We're on Zacks.com/YouTube. You can get everything on Zacks.com as well, and on our Twitter feeds, both Zacks.com and my own at Tracy Reineck. So be sure to get us somewhere, and I'll see you again next week with some more earnings charts.